We're covering payment methods, payroll practices, record keeping systems, and penalties. This is a super interesting session, not as interesting because there's no real math, like Melissa got to engage in calculations and we got to look at some really fun stuff. So payment methods. As an employer, we get to choose whether we're going to pay cash, direct deposit, pay card, and each state has varying laws and rules of how you're going to pay an employee and when the payment is due after a pay period. In Colorado, you have to pay at least monthly and 10 days after the pay period end date. Kate in our office in New York was telling us in New York, if they're laborers or minimum wage employees, they're to be paid weekly. The payment has to be to a financial institution readily available for the employee. When we're processing payments, paying by check, you need to put in some controls. Currently in most software, I think that you can put in blank check stock and the software itself creates the ABA and routing numbers, and that helps prevent some fraud. Back years ago, we used to buy stacks of pre-printed checks with the account numbers on the bottom. And if you work for a big company, oftentimes that check stock is behind lock and key, and there's a really tight recording of check numbers. Otherwise, fraud can be perpetrated by people in the payroll department stealing checks and going and cashing them. So when you talk about scripts or tokens, when employees are piece rate, say maybe they get paid to paint $1 or make one Christmas wreath, when that piece of work is done, oftentimes they can go pick up a token in exchange for what they just completed. And at the end of a pay period, turn in those tokens for payment of a paycheck. So many companies have checking accounts for payroll only. So sometimes they're called zero balance accounts. And as checks clear the bank, so it could be one check for $100, the bank has a situation set up where only $100 will go into that account to clear that check. Other times employers will have a payroll account and they'll see that their payroll is going to be $100,000 and they will deposit $100,000 in the account on that day. And hopefully at the end of the pay period, once everybody has cashed their checks, the account will go to zero again for the next month. One of the most expensive things for employers is off-cycle payroll. That could be missing employees' wages, hours, a vacation pay, etc. When there's an off-cycle payroll, things that you need to consider is, will you give the employee direct deposit? What about the tax payments for that payroll? Then how are you getting that entry into the accounting system? Are you running a complete payroll? Like with us, clients run a complete payroll. If you have an internal system, are you running it through payroll? Are you doing a cash advance through accounts payable? Another thing to consider is stop payments and reissuing checks and the procedures that you would have behind that system. So if there's an error on a check or the employee has lost their paycheck, what type of procedure? Is it written? Is it a standard policy? So some of the things to consider when an employee shows up at your office on Monday and say, hey, I got a paper check on Friday, but I washed it. Can they provide you a copy of that check? Can they give you the pieces of the check that maybe got ripped or torn so that you have physical possession of that check? If you don't, do you log into your bank? Do you see if that check is cleared? Do you have a time limit that's when they come in on Monday, do you go, oh, it will be Friday before I can reissue a check because it may not, you may have gone to a check cashing facility and cashed the check and it just hasn't cleared our bank. So you have to be sure and do that. And with the bank, if you're going to reissue a check to that employee, do you put a stop payment on the check because maybe he said he lost it or he never received it? And so you go to the bank, you put on a stop payment, and in time, every now and then a bank can still accidentally clear that check. And then you have to consider fraud situations too. If you put a stop payment on the check or don't put a stop payment on the check, depending on your company policy, and you issue him a check and that check clears the bank, what type of policy and procedure do you have for that situation? Because in essence, the employee has been paid twice. And we really see this when you have direct deposit and the employee closes his checking account or the bank closes his checking account. And it can take, if direct deposit has an effective day of Friday, it can take to the next Tuesday before you as the employer knows that the funds that were going into that direct deposit account are being returned to you. So Friday, the employee shows up at your office and goes, I didn't get direct deposit. And you start doing some research, why they didn't get direct deposit. Did he close his account? Did he give you the correct account number in the first place? And if he did not give you the correct account number, it will be returned to you with an NOC, notice of change, and it takes a couple banking days. There's a lot of advantages to paying employees by direct deposit. Funds are available on payday. If you have a situation where everybody's on paper check and you're mailing out those checks in the mail, again, you have no control over UPS.
You're doing great, but you're behind on a few slides.
That's right. So employee advantages of direct deposit. Funds are available on payday, so there's no waiting for the checks to clear. So you don't have as big of a bank reconciliation depending on your employee size. If the employees are out of town or on vacation, again, they have direct deposit, so they have the cash in their bank account to pay all of their mortgages, etc. There used to be a time when employers got interest on float. And so that would always be a disadvantage when an employer thought about, oh, I don't want to offer direct deposit because I get interest on the money in my account. This, in today's market, it's rare that you get direct deposit or not direct deposit interest on a bank account. And also, it's really difficult to stop direct deposit that's going through an EFT. Once that file has been uploaded to your bank and it starts processing through the Federal Reserve, you can't really stop it. You can do a reversal, and then you've got the problem of if you try to do a reversal of $100 and that employee only has $99 in his account, you're not going to get all your money back. And also, so NACHA is the Electronic Funds Association. The Consumer Financial Protection Bureau is NACHA, and all of the banks abide by NACHA rules and regulations. So with a pre-note on most systems, so an employee gives you a direct deposit account number, there's what's called a pre-note. And you enter the employee's direct deposit account information into the payroll processing system or online on the bank system, and it will send a 0 file to verify the bank account number, the receiving bank. So say it's going from Alpine Bank to US Bank where the employee has the file. Alpine Bank will send a 0 file through the Federal Reserve to the US Bank through the NACHA, the ACH processing system, to verify that checking account and routing number. And if it's incorrect, US Bank will send back through the Federal Reserve to Alpine an NOC, notice of change, that says, hey, that account number is not correct. And then you can have an opportunity to fix it before you send live funds. So there's a couple settlement options. They've just started in the last few years to do same-day ACH settlement. And you can see that there are some windows of time that, as a company, if your bank allows you as a company to offer same-day ACH through their merchant services system, cash management system, if you have uploaded your file by 10:30 Eastern time, those funds can settle to the employee's bank account by 1 p.m. And again, there's another window at 2:45 Eastern time that the employee can have direct deposit at 5. And now there's a late, just starting, late afternoon that you can submit by 4:45 Eastern time. And again, this will depend on your bank and the availability that they make you, they will let you have same-day ACH. And this is a really great option if you need to make an emergency payment to an employee, say you miss paying him, then you can use that option. Pay cards. You can offer pay cards in the state of Colorado. If you wanted to, quote unquote, mandate direct deposit for all of your employees, you have to give a couple of options, and pay card being one of those. It's a great resource for unbanked employees. So Manon, you have requested control of my screen.
I just wanted to catch you up on the slides.
That's all right, I'm good. So payment method, let me look, let me move this. Nope. So we've covered direct deposit, we've covered same-day ACH, payment by pay card. So were you guys not seeing payment by pay card?
We were not, but now we are.
Okay, sorry, I've got two screens. So now I understand what you're finally trying to say. I'm like, why can't you see the screen? And I was looking at the wrong screen. Sorry, Manon, thank you. So you can offer direct deposit on pay cards. It's a great resource for unbanked employees. It's a lot less expensive than employees going to a check cashing facility, which takes a percentage of their paycheck. With a pay card, the employee also gets additional benefits. They can have some online banking features like you and I have with our banks. They can do bill pay, they can buy stuff online. And if they just have cash from a check cashing place, some of those options aren't going to be available for them. Pay card reversals, I'm going to say I've never seen the ability to reverse an employee's direct deposit off of a pay card. So if you make an error on an employee's paycheck, depending on the pay card vendor and your relationship with that pay card vendor, you can't reverse the direct deposit off that pay card. If you have some of the pay cards where you have an online portal and it's a little bit more open access versus an employee having, say, a Walmart pay card that they have picked up and you're direct depositing on that. If you have a good relationship with the vendor, you can have more options. Pop quiz. Check fraud can be committed in all of the following manners except, and I'll give you just a second. And again, Manon likes you to put your name in. Okay. Fraudsters are often good at getting checking account numbers. So positive pay is a really great feature that you might want to look at your bank and see if they can offer positive pay to you. And you just upload a file to the bank that lists all the employees. It's got the check number, the check date, the employee's name, and the dollar amount of the check, and they will only clear the checks on that list. So what do you do when you have open checks in your bank account reconciliation, unclaimed wages? This happens a lot in the restaurant industry, where most of the wages for employees is cash at the end of the night from tips, and they have a check maybe for $2.12, and they don't cash those checks. You have to report those to the state of Colorado and turn those funds over. So payroll processing, your company should have a lot of processes and procedures around payroll processing. So when you gather the time from your employees, whether it's an automated time and attendance system, whether they're tracking it on a spreadsheet, whether they're keeping time cards, all of that information is the beginning process of your payroll. So when you start gathering the information, control totals are really important. So if you have a stack of time cards, it's a good process to maybe have the employee start adding up their time card, then the manager verifies it, and you would be the third person. That's giving you the control totals, and it's going to give you batch processing numbers to ensure the accuracy of your data. So you have added up 100 time cards, you have 480 hours of regular time, and then once you start putting each individual employee's time into your payroll system, you have batch totals to start verifying your data. And if there's a discrepancy between what you've 10-keyed on time cards, what your time and attendance system says, what your Excel spreadsheet says, as compared to what you've entered into your payroll processing system, that needs to be double checked. And you have to start balancing and reconciling from that point to be sure that your payroll information is accurate. So double checking doesn't stop with just the time cards. So you should have control totals or totals that you expect for all types of things. If you've got gross wages, you happen to know what's being deducted for pre-tax, maybe Section 125 plans, you should be able to do some quick math and say, calculate what your FICA and Medicare should be. Is it close? Is it not close? Do you need to take further investigation into the payroll system? And you're going to know every month what has been deducted for your health insurance. You've got a health insurance bill. Is what you have deducted from your employees for that month, does it match what you're expecting health insurance to be deducted? If you're deducting 401ks, is it reasonable? Does it match what you would expect, what you've been expecting? Did you have a new employee start deducting and you have control totals that go from month to month? So record retention and how long you keep your records, it's really important. And today, with computers, I think we keep records longer than the record retention requirements. Back when we used to do paper storage and you had boxes in your storage room, it was more visible and you probably had a cleaner record retention policy and you had a disposal date marked on the outside of the box. You can have the same type of situation for electronic records. And if you aren't keeping your employment records long enough, there are some fines and penalties. So one good thing to do with record retention is pull up a policy that tells you how long you should be keeping your records and keep it in a binder so you can write down disposal dates of those records and when they were disposed and how they were disposed. So back to reconciling your payroll. So it really started with employees and their time cards. And then if you have a separate tax system, you need to be sure that they are being reconciled. Accounts payable and the amount of your insurance bills should be compared to what was deducted from your employees' paychecks. And as you go through the month, your month to date, you add your 3 months, you should have a quarter to date, make sure that they balance each quarter. And on an Excel spreadsheet, you could have federal wages for the first quarter, second quarter, third quarter, year to date, and what's going to total up on your W-3. And if you keep it going throughout the month, it'll make your W-3 processing and filing your W-2s much easier. If after you filed your 941s, if you discover that when you're doing your W-2s and your W-3s, that you have a discrepancy between your 941s and your W-3s, you might have to do a 941X, which is an amendment to your 941s. So every quarter you send your 941s to the IRS, and at the end of the year, you send your W-2s and your W-3 to the Social Security Administration. They reconcile those documents between the two agencies, and periodically you will get a notice from the Social Security Administration saying that your 941s that you submitted don't match what you submitted on the W-2s. Once you get that Social Security notice, you go back and research your 941s, and you may have to again do a 941X to the IRS or a W-2C to the Social Security Administration. Here is another pop quiz. An employee who was terminated on March 3rd has not picked up their final check. Which regulations govern the situation? And I'll give you just a second. All states determine how long an employer must hold unclaimed wages. So another big thing with payroll and payroll departments is confidentiality. You have employees' names, addresses, bank account numbers, social security numbers, and keeping those very secure, whether it's on an online system, whether it's under lock and key in a file cabinet. And if you happen to have a data breach, you need to contact law enforcement. Say if somebody broke into your office, if your office was burglarized or somebody broke a window, you need to notify law enforcement, the IRS, and the victims, and let them know that their information has been breached. This could be even if it was electronically breached. I was on a webinar just last week because there's all these unprecedented unemployment claims, and it is pointing towards a breach on Equifax from 2007. So as a company, you have to be careful and mindful, and the Department of Labor on the webinar gave some great resources on things that you can do to help your employee in the event you're receiving one of those fraudulent unemployment claims, to help them fix, because they've been a victim of identity theft. So another thing that often happens with companies is phishing attempts and scams, and you probably see them in your email. And it's best to never, even if you get an email from an employee that says, hey, will you change my direct deposit account number? And they give you an account number, chances are that could be a phishing attempt to redirect the employee's direct deposit to a fraudulent account. So if you receive one of those, I would say contact the employee directly via phone, have them come into the office and confirm the account number change. Don't just make the change based on an email. So check fraud is another big issue. If you're issuing paper checks versus direct deposit, it's much easier than it used to be years ago to go down to Office Depot and buy check stock and check and software to create the numbers on the bottom of a check. So an employee at Walmart, all they really need to do is take a picture of one of your payroll checks, and they could duplicate that check via check stock at Office Depot, right? And another big thing that we're seeing in the industry with the mobile check deposits, that employees have a mobile app on their phone, is the employee depositing it, rightfully so, into their bank account. And oftentimes they keep a copy of that check, and maybe they put it in a file, and maybe they are living in the dorm at CMU and they have a party in their room, and one of their people find that file, and they have a mobile app on their phone. They can take a photo of that check also, and that we're seeing some fraud perpetrated that way. Some big corporate things that happen is, if you, and I haven't personally seen situations where somebody that works at a bank where they're getting the lockbox information, taking copies of vendor checks and recreating checks. So I think those are some big things that could happen. I haven't personally seen them, but I have seen people at CMU taking pictures and depositing their roommates' checks fraudulently. So it's really important that you reconcile your bank account every month. And if you're a large employer with lots, maybe you do it more frequently than once a month. Maybe you do it per pay period, and you have positive pay set up on your bank account. So some legislations that are impacting payroll. So we have seen tons and tons of legislation come through this year with COVID. We've seen the FFCRA tax credit, the employee retention credit in the state of Colorado. We have the HFWA and the PHEL. So as a payroll professional, it's really important that you stay up to date with all the legislation that can come through that impacts payroll. Congress will pass a bill, the president signs it, it becomes law. Oftentimes, even when something becomes law, the regulations need to be interpreted. And from a payroll standpoint, we see that oftentimes with the employee retention credit, or the FFCRA tax credit. Okay, the president signed it, great. Now, what does that really mean, and how is that going to impact payroll, and how does that go into play? What's it going to look like on the 941 form? So it can take a little bit of time for payroll professionals to deal with the regulations that come down from Trump, and then it's got to go through Treasury, and we have to really figure out what it means, and staying abreast and following those laws that come down the pipeline can be incredibly, incredibly challenging. So there's lots of resources. One, there's the APA that you can get textbooks, and they've got great webinars, and just follow the irs.gov, and you can get on some email lists. And here's some federal government resources that you guys can all use. One sec. Okay. And as a payroll professional, keeping track of how much your payroll costs your company, and how much your job costs the company, right? How much does each employee cost? And depending on the company, governmental organizations do some calculations based on employees, and they can allocate them over different funds. Some organizations do job costing, and they allocate employees' wages over different jobs. So a lot of information is tracked in payroll. And over towards, I'm just moving some stuff on my screen. One sec. So payroll metrics and benchmarking, depending on the size of your company, you may have to calculate some stuff for your management team. The cost for each employee, which is labor, the cost of the software, overhead, to break down what it costs per employee. And in large companies, payroll processing accuracy rates, like I said, it's incredibly expensive to fix one employee's paycheck, because maybe you should have paid them 10 hours of overtime instead of 10 hours of regular time. So it's your time to fix that error. And maybe you had to run a supplemental payroll run with your payroll vendor. There's that cost. So thinking about some of these metrics, and some companies do track them. So here's just some suggestions on what it really costs and things that you might want to track. Direct deposit, number of EFTs per employee. So business continuity plans. When you process payroll, and if you're on QuickBooks Desktop and you don't have a backup of your QuickBooks either online or a zip drive, it's going to be really hard to pay your employees if, say, you have your computer crashes. What are you going to do? So if you're a small business, having a business continuity plan is critical. If you're a large business, a governmental entity, you probably have a business continuity plan and what you're going to do to pay your employees. And specifically with natural disasters, if your payroll is on one computer in a location in Texas and there's a power outage and an ice storm, how are you paying those employees? So you have to really identify risks and weaknesses. Do you have a cloud-based system? Do you have a desktop system? If the power went out in your facility, what how long could you go? Do you have a backup generator? If your payroll person called out because they won the lottery, what continuity plan do you have for that? What does it take? What does it take to figure out somebody's job tasks? So when you're doing your business continuity plan, what's essential? And you could practice it without a real natural disaster. You could act like, and vacation is a great thing. Somebody's going out on vacation. What does that person do? Do you have processes and procedures, statements of works that somebody could just pick up and do? And for payroll, you should always have a backup with additional practices and procedures, how the flow of payroll works. And if you're negotiating with a company to do your payroll and, third party, what does the agreement say between the company and your organization? If you are purchasing third-party software to process payroll internally, again, what is that agreement between that third party and you? Understand it, make sure you know how you're going to get updates, technical support, patches, etc. What type of training? So we talked about federal retention or record retention requirements. So here's an enormous list of the record retention requirements. So you might put it on an Excel spreadsheet to know what's 4 years, 3 years. And when you are developing your payroll practices, know how long you need to keep your 941s. That's for 4 years. So this is on the test a little bit, so I would take a look at like specifically 941s for 4 years. There is a couple of questions based on record retention. So each organization has different requirements. So this is federal record retention, IRS, Social Security, FUTA. The DOL can have different ones. So be sure you know the difference between DOL and IRS regulations on what you need to keep. Again, even more laws and rules. So I would know these acronyms. The ADA, the Civil Rights Act of 1964. You'll get one question on something on this page. So again, more record retention regulations. And I'm going to let you guys just read those. Okay, system processes. So the system should work together. If you've got a time and attendance system that's automated, it should flow into your payroll processing system through an import. Your payroll processing system should be able to communicate with outside software. So you've got a different accounting system that it can create a file from the payroll software into the accounting system to post the general ledger. And maybe your payroll processing software creates the files for the W-2s to upload to the Social Security Administration, creates the bank files for your direct deposit in your EFT. that automatically, it's like an Excel file, you upload it to your bank. In most, a lot of systems are becoming one single source of data from applicant tracking to retirement. Before that, they had systems that were more antiquated, and maybe your HR was in one software, your time and attendance was in a different software, and your payroll was in a third software. And they would do what's called batch processing. So maybe your employees clocked in and clocked out on one piece of time and attendance software, and it batched every night and sent time to maybe the payroll processing system. And it's called batch processing. It's not real time. It's online and it moves automatically, but it's not real time. As technology has advanced so rapidly, I'm going to say more systems are online and real-time processing. So when you clock in and out on a mobile app for timekeeping, it's instantaneously. It's not held someplace to do a batch update. So when you have a payroll processing system, be sure you have a set of processes to know exactly what you need to do to schedule payroll reports, processing, to upload your 401k, to schedule your EFT payments, to schedule your state payments. Make sure you've got a checklist, and somebody's double checking your checklist to make sure that you haven't missed any of your EFT payments. Always balance, double check your reports. Always, just like with cutting a piece of wood, measure it twice. So always balance your stuff twice. Make sure you get the same total 2 times. Have somebody else look at your work. Who wants to make a late tax payment because you didn't double check your work? Oh, this just pops up. So everybody gets the answer. Which of the following payroll issues is governed only by the state? And that's a sheetment of wages that you pay to the state of Colorado. And I'm making it like virtually all the way through this entire presentation that was supposed to last for a week, just to let you know that we are like zooming ahead. So does anybody have any questions? I can bring up the chat. I'm not seeing any questions in chat. So this is actually a good stopping point because we only have like, I don't know, like 15 slides left. And we have, just go all the way to noon, Mandy? You're on mute.
No, it just goes until 11:45.
Perfect. Well, okay, then let's stop here. And I'm going to say we will be able to finish this section easily tomorrow. And so we could probably not have class on Friday. Does everybody want class? We want Melissa to do more 941s? Type yes in the chat. Come on, Melissa.
That was an evil laugh.
Yeah, it was.
Melissa.
There's only so much I can talk about with the 941s.
But you can talk about it over and over and over.
And I have.
And over again. I mean, this section is a rough section of really super exciting stuff. That's super exciting.
I remember from my test questions on how long you're supposed to keep stuff. So I know Angela mentioned take good notes on that stuff. I agree with her 100%.
Yeah. I mean, there's at least 1 or 2. I mean, it's not a huge quantity, but there definitely is like 2 questions. So Nothing through the power of elimination that you couldn't get it right. It's not like it's math where they try to trick you and give you two quote unquote correct answers. All right, it is 11:45. Yay.
Right. Thank you,
Thanks, Angela.
Angela.
See you guys. Bye.
Bye.
Bye.